I think we'll start now. What I'm going to do is, to avoid sort of background noise and interruption, I'm actually going to put the call on mute. So what I'd like you to do is, as questions may arise today, just make a note of them, and then when I'm finished running through everything, I'll unmute, and then we can have a discussion about what you saw or the questions that you might have. So I'm going to go into mute mode now.
The conference is now in silent mode.
So the first thing that I wanted just to talk about, we have today on this call some people who are existing clients, some people who are a bit familiar with what we offer, and then we also have some people who are actually new to the software. So I just want to start by making the observation that we have the three programs, VisionWorks, CorpWorks, TrustWorks. They are each distinct pieces of software. They do their own specific job. They do it very robustly. And then, of course, all three link together. Before we start, what I'm going to do is just bring up a planning process map that we've developed. And I wanted to start with this simply in order to develop some concepts or some terms, because we'll be relying on them later. So one of the things we did was we created the standard financial planning process table. The six-step process, as we all know it and as it's been taught for years. And I wanted to focus on step 2, discovery. You'll see we've defined two types of approaches to planning. One that we call retirement assessment. And this is the kind of planning work that started over 20 years ago. And it essentially asks the question, how much income do you want in retirement? And then there's the approach to, so it's just focused on retirement. What do I need to contribute to TFSAs, RSPs, et cetera, to ultimately have the income that I want during my retirement years. And then, of course, there are the cash flow-based models. And they're the ones that take a complete look at life. What are our sources and uses today just as much as during our retirement years? So if we look at VisionWorks, what we see is that it can actually map into the six-step process. You can use it to do financial plans. And the innovation that we developed over the summer is that our software has always been cash flow based. It's always tried to do plans in a proper, complete way. But what we did was we created these fillable PDF questionnaires, which is what we're going to look at today. But what we also did was we built in that retirement assessment functionality into the software. And again, we'll look at that today. So when we talk financial planning, what we mean is using the software in a very prescriptive approach to planning with clients. In other words, you have a goals conversation, you collect data through a questionnaire, and you create the plan for the client. It's a prescriptive technique. And the one thing that I'll just point out very briefly is you can use the software that way. There are certain efficiencies, which I won't get into, but because the software is very visually driven, when you do present the plan to the client, very often they'll have questions. They'll say, well, what about this? What about that? And typically advisors make notes, go back to their office, key in the changes, and then have to re-meet with the client and re-present. And because of the visual nature of our software, you can actually make those changes live with the client. And there's just a huge economy of time when you do that. The other thing, of course, you can do with our software is you can go into this whole new era of life planning, which is growing in popularity, particularly in the U.S., and we're even seeing mention of it in articles now in Canada. And it's a very different approach. The numbers may be a little bit more in depth, but the significant difference is that is an approach which is done interactively with clients. It's very values-based. It's helping them create their vision of life and so on. And it's actually working with them live to evolve the plan. So there's much more client engagement, and as a consequence, there's actually a lot more ownership. So if we just sort of summarize what we've looked at, there's the standard 6-step approach to planning. There are really 2 planning styles: retirement assessment, just focusing on the retirement years. There's the cash flow approach, which is, based on a complete look at life. What we've done over the summer is we've created these PDF questionnaires, and in combination with that, we've developed the software in a way that you can do these retirement assessments. You can also do normal financial plans for people, and if you want, you can step into this whole new era of life planning. And the reason that I wanted to review this is just to really establish that the innovations over the summer have made the software extremely flexible. What happens now in the marketplace is that software either does a retirement assessment or it's a cash flow-based model. And the problem is very simple. If you're doing just retirement assessments for people, but you're working with a very high net worth client, for that person, the simple retirement assessment simply may not be what they're looking for. They want something much more robust. So the whole idea of our software is that it's now very flexible. You can take any approach you want. And it's also what I'm going to call scalable. And by that I mean you may start with a client, and the client might come to you. Could be a high net worth client, but the client's perception of planning is it's a very tedious task. You're going to ask me to fill out a really long questionnaire. We're going to have multiple meetings. You're going to be showing me spreadsheets. You're going to be talking about asset allocation theory. I really just don't want to go there. Tell me if I'm going to be okay in retirement. So you can actually do a retirement assessment for the higher net worth client, expose them to the whole life planning concept, for example, and then if they're interested, you can literally flip a switch and change a retirement assessment plan into a full life plan if you wish. So I wanted to sort of establish those concepts clearly before we get going. And then the other thing that I just wanted to touch on very briefly is this whole issue of estate planning. And we've developed an estate planning issues map. And the reason we've done this is because the divorce rate in Canada today is 40%. And that tells us that there are a great many clients who are in second marriages and have blended families. And the problem is very simple. Existing software in the marketplace, and I use the Bill Sue, Bill Jr. example, assumes that on Bill's death, everything goes to Sue, ultimately to Bill Jr. But in the case of second marriages and blended families, we could easily see assets going to children from previous marriages. The family cottage is going to Bill Jr., the house, the TFSAs, the RIFs, everything else will go to Sue. And the issue, of course, is if the cottage goes to Bill Jr., there could be a substantial capital gains tax payable by the estate, and that puts a big hole in what's left over for Sue. So the issue is very simple. If we're not integrating the terms of wills into financial forecasts, in a great many cases, given the divorce rate, we can actually be misrepresenting the financial circumstances of the surviving spouse. So I just wanted to touch on these couple of concepts before we get going, because we'll be looking at them as we go through the software. So I'm going to go back to our website, and you'll see that if you open the VisionWorks menu, there's now a new item for questionnaires. And on it, what you'll see is that there's a short video, 7 minutes. It shows you exactly how to use the questionnaires. There's also a PDF file that you can print, and it has all the step-by-step instructions as to how to use them. So play the video, read the PDF file, whatever your preference is. So when we look over the types of questionnaires, you can see that we have a retirement assessment questionnaire. We have the retirement and estate assessment questionnaire. So it's a retirement assessment, but it also asks some estate questions. So this is the questionnaire that's appropriate for those clients who are in second marriages and have blended families. And then, of course, we have the financial planning or life planning questionnaire. And then you'll also notice for the retirement assessment and retirement and estate assessment questionnaires, we have two flavors. One is for people who are not yet retired. So it's going to ask questions like, when do you want to retire? What do you expect your CPP OAS benefits to be? Whereas the post-retirement questionnaires won't ask, when do you want to retire? Because people are already retired. And it won't ask, what do you expect CPP and OAS to be? It'll ask, what are you receiving in CPP, OAS, your defined benefit plan? So the questionnaires are tailored to the circumstances of the client, pre-retirement, post-retirement. The other thing that I just want to point out about this evolution over the summer, the questionnaires and these retirement assessment reports, is that what we were doing previously with the software was we were essentially saying, here we are, we can do full financial plans or full life plans, and we were really putting people into the cockpit of a jumbo jet. And the problem was that a great many advisors, the software that they'd been using, it was more like flying a Cessna. So one of the reasons that we've done this is so that advisors can step into the cockpit of our version of a Cessna, do a retirement assessment, and then what they can ultimately do is grow into learning how to fly a jumbo jet. So rather than it just being thrust into it, it's something where you can evolve your skill sets, if you will, with the software over time and get to use it, fairly efficiently right from the beginning. So what I want to do is just open this pre-retirement assessment questionnaire to show you what it looks like. This will just take a second, of course, to load. And I'm just going to expand it in size so it's a little clear for everybody. So a couple of things. First of all, the versions on the website use a blue color scheme, but we actually have these with a color scheme that uses red, green, and brown. So the idea is that the color scheme of the questionnaire can be more suited to your corporate branding. And if you want any of those different colors, just let us know and we'll send them to you. You can also add up to 2 logos to the questionnaire. So again, that helps you customize it. And you can go in and you can edit all this introductory text, put in your disclaimer, anything you'd like to do in the way of instructions for the client, whatever it might be. And once you've customized things, all you do is you click the freeze form button, and then that will save, lock in all that customization. So let's go down and have a look at the questionnaire. So you'll see it's very simple to work with. You send it to the client as an email attachment, they open it up, and then they simply start putting in their data. And you can see it's very simple to just work your way through. One of the other observations I'll make is that if you know some of these answers already, there's no reason you can't at least partially complete the questionnaire, save it, and then send it off to the client so they only have to complete, the remaining fields. So again, that would make it very easy for clients. So they go through, complete whatever fields they need to, and then if I scroll down to the very end, all they need to do is click the submit button. They can enter a password so that the data is encrypted. And then what happens is automatically an email is created. The data file is attached. They simply address it to you and then send it off to you. So let's close out of the questionnaire and see what happens. When you receive the emailing from the client, you're going to save it on your computer, and then all you're going to do is run VisionWorks, click the Add button to create a new plan, select the Import from Questionnaire option, and then you need to import the type of questionnaire it is. So I have a data file already done. So I'm just going to select Retirement Assessment. I'll give the file a name. I'll just call it RA for Retirement Assessment. Click the OK button, and then what I need to do is locate that data file. We recommend that it's just saved to the Questionnaires folder in VisionWorks, but you can save it with a client file in your database, whatever you want to do. You click the Open button, enter the password that the client's provided you with that decrypts the data, and then it's all automatically imported into VisionWorks. So let's open up the file and see what we get. You will see, for example, on the About page that Bill and Sue are imported. And if we go down to entries, you'll see things like career income is being imported. Note that Bill's intention is to retire next year. Go to the Joint tab, the data they filled in about their house, what they think it's worth, for instance, what they pay in property taxes, operating expenses, all of that's automatically imported. You'll note, by the way, in our retirement assessments that one of the things we've done is we've separately itemized homes and vehicles. And that often seems unusual, but the reason that we've done that is very simple. In this day and age, it's not unusual for people to consider downsizing their home at retirement. So by separately itemizing them, it actually makes doing a retirement assessment plan very easy. If they choose to downsize their home and the home expenses are related directly to the home, then all we need to do is go in, sell the home, all those expenses will end, and then we just need to create the alternative home, whether it's a condo or a rented home, whatever it might be. So it actually makes creating a plan much more efficient if we just ask for a little detailed information about homes and also vehicles. Vehicles are expensive to run. Certainly replacing them can be if you're not leasing them. And ultimately, there comes a point in life where if we're planning for 90, 95, we're not going to be driving at some point. So by itemizing vehicles, we're able to say when will you stop driving, about what age, and then all of those expenses will automatically end. So you can see it's very easy. The client does a lot of the work, completing a questionnaire. You just import it. Everything gets populated. And then what you're able to do virtually immediately is you're able to provide clients with what we call an initial assessment. And the intention is to take the information they've given you and literally turn around and within a couple of minutes send them back something that gives them some insight as to whether or not they're on track. So we'll look very quickly at a retirement assessment. As you can see, the software has to take all that imported data and assemble all the output and so on. Before we look at it, though, I just want to remind you that if you click the Settings button, you can customize the look of all of the outputs. So you can select a font you like that matches, say, your corporate marketing material. You can select whatever color you want for the cover page. You can add up to 2 logos to the cover page. Through the body of the report, there are certain borders and subtitles, and you can customize the color for all of those. So let's have a quick look at an initial assessment. You can see retirement assessment is pre-selected because that's the kind of questionnaire we imported. All you do is click the initial assessment checkbox, click the preview button, and then we'll see what this initial assessment looks like. So all it does is it provides clients with a bit of a recap. Let me just enlarge that a bit. What they said they would need in, or expect their expenses to be during retirement, when they want to retire. They're both talking about next year. And then it shows an income assets graph. So just to remind you, we talked income assets. They're the assets that we'll be using up during our retirement years. Open portfolios, TFSAs, RSPs, RIFs, defined contribution plans, etc. And you can see the text that gives a little explanation. You can edit that, so you can customize it and save it, into your own taste. And what this initial assessment does is it looks at the income assets forecast and automatically inserts a line as to whether they're going to be okay or not. So this is saying we've got a shortfall. And then if we go to the next page, what it does is it suggests some things that they might consider. They might want to consider downsizing their home. They might want to consider retiring later, earning a higher return on their investments, for example. They might want to consider reducing their desired income in their retirement years. And these statements that come up will depend entirely on, will they be okay? Is there a shortfall? Is this a retirement assessment only, or is this a retirement and estate assessment? For the retirement and estate assessments, there are a couple of sections that are added that show if there are going to be estate issues and also if there are going to be additional life insurance needs. And then, of course, the statements also will change depending on whether this is a pre-retirement initial assessment or whether it's a post-retirement initial assessment. If it's pre-retirement, there'll be comments about their career, for instance. If it's post, there won't. So all of these are automatically inserted, so you don't have to do a lot of work on them. You can go in and change the wording if you wish, and then save it so that depending on the statements that automatically are generated, they'll use your words instead of ours. So quite literally, you can produce this, save it as a PDF file, shoot it right back to clients, and give them an initial take. So then the question becomes, okay, now that we've given you this initial assessment, where to from here? So as those of you who are familiar with VisionWorks know, what we always talk about is before you make any changes, we always recommend that you create a new solution. So you just go to the Solutions tab, click the Copy button, and this is going to generate a 100% identical copy of that initial import of data. And the idea is that we create these new solutions. You can create unlimited new solutions. And we make our changes in that. So we always have where did you start, and then what have you decided to do? And then that allows us to do comparisons between the two. So I'm just going to call this solution RA Changes. If I could spell, I would. Save it. And then all we need to do is go to the Tactics tab, the Retirement sub-tab, click the Retirement Assessment button, and what comes up is a dialog that shows us the output, are you on course or not, and gives the basic variables that are generally looked at for retirement assessment. Reconsider your retirement age, reconsider your rate of return on investment, reconsider your desired expenses in retirement, and are you willing to also save more than this is open portfolio savings, than you're saving now or contributing now to TFSAs, RSPs, et cetera. So I'm actually going to turn off, no, we're going to retire soon. We really, just are putting money into our TFSAs, RSPs. So the first thing that we'll do is we'll change this average rate of return. So let's just assume Bill and Sue are invested in GICs right now. They're approaching retirement, and they've gotten very conservative. So let's have a look at the impact of a portfolio that's just a little more balanced, earning a little more of a return. So all we need to do is change the variable, click the Calculate button, and then what's going to happen is that VisionWorks is going to look at virtually every portfolio, open, TFSAs, RSPs, and it's going to apply this new rate of return across the board. And when it finishes doing that, we can see the before and after impact. So the before is the line, and then the additional rate of return shows us this area graph. So we can see an improvement, but we still see a shortfall. So then we could go in and make some other changes. In this case, I'm just going to change Bill and Sue's retirement ages, push them out a couple of years. What kind of impact would that have? And again, click the Calculate button, and we're going to recalculate the output. And when we make the change to the retirement age, in the background, all associated entries also change. So we can see by making this change, we've pretty much resolved the issue. So when I talk about background changes, as an example, if Bill and Sue have an employer and they're making contributions to defined contribution plans, if we push the retirement age out a couple of years, then what will happen, of course, is the contributions to their defined contribution plans will also be pushed out a couple of years. And that sort of thing is automatically happening in the background. So there's no need to go anywhere and make all of those changes. It's all being handled. So let's just assume that we've made those two changes. Everything is pretty much on side. We like the result. All we need to do is click the Save Changes to Current Solution button, and then the retirement ages, the rates of return on investment will all be automatically adjusted. And once again, of course, we'll have to rebuild all of the data in order to assemble a report. And when that has happened, then we'll look at the retirement assessment plan that's generated. So notice we're not looking at the initial assessment, we're looking at the retirement assessment with all its different features: cover page, disclaimer, introduction, plan, parties, goals, etc. And you can choose, so these are the different sections that we felt were appropriate for a retirement assessment, and we'll look at those in a minute. But you can choose to turn certain things off if you want. So let's see what this looks like. We'll click the Print Preview button. This is going to go through a couple of stages. The first is, of course, taking all of that data and doing all of the background calculations, which you see doesn't really take too long. And then once those calculations are done, what happens is that everything then gets assembled into the report output. And that takes just a few seconds to occur. By the way, we're adding a little clock here. It's just for the next release, you'll see it. So let's open up the report and have a look at what we generate. Again, all text in all of our reports is always editable, and you can save the changes you make as your default so that in the future, whenever you create a report, your text comes up. And then for those of you, here's the table of contents for the retirement assessment report. For those of you who are familiar with our software, not only can you change your default text, but you can also go in and edit text and save it just for the client file. So you can personalize all reports. By the way, you have the ability to include people's photos in a plan if you want to, which is always, I think, a nice touch. So let's look at the goals page. So it starts off with the initial goals, the amount of income or the expenses they anticipate, desired retirement ages, and so on. And then if we go down to decisions, because the initial assessment said, here are your options, so their decisions are now to retire at 62, 59, rate of return goes up. They're not going to save any additional non-registered money, and it's explained there. And again, no change in their desired expenses in retirement. And then if we go through a few things that I just want to point out, a retirement assessment report is very flexible. So if your client, for instance, makes charitable donations to their church, and that's a very important thing in their life, you could add that into the plan. And then when you go to this goals section, you can talk about any of those other wants that they discussed with you. And if we go forward, we can see the to-do list. A retirement assessment just focuses on any additional savings that they may need to make. We have a little table, shows their sources of income over the next number of years, their uses, home expenses, lifestyle expenses, etc., projections for their different assets. And then there's certain planning tactics, splitting pension income, amount income. There are others in here that are automatically included. If you are noting donations, there's a tax tactic about optimizing which spouse, for instance, claims those donations. So these are all automatically included. We can see when they're going to start their OAS and CPP, what they expect to get in the first year, prorated based on their birth month, and then what they'll get in subsequent years. And then a net cash flow forecast. The red line shows what their expected expenses will be. The vertical bars show the sources to meet those expenses. We can see a shortfall here. These bump ups, by the way, are vehicle purchases, so again sort of indicates the reason we should really be itemizing these. And we can see this output in both actual dollars, the dollars they'll need, and translated into today's dollars, getting out inflation. And then there's a supporting table that shows the different sources. And if we go forward, one of the other things we show is a surplus or deficit. And in this particular case, the deficit is indicating that they're going to need to draw down on their capital. So when that starts to happen, they're not shocked by it, they're expecting it. And then if we go forward, we also see the income assets forecast. Again, these are the assets that are going to generate income during retirement, open portfolios, other accounts plans or TFSAs, pension plans. We can see that in both actual and today's dollars, and then again, the supporting table. And then if we go forward, another section which allows you to compare the original retirement assessment with the new plan where we've made some changes. And it shows net worth, income assets, and taxes, shows the difference between the two. So you could visually see the difference. And again, you could go in, edit the text, add notes, summarize changes in different ways. So again, this is an optional section, but it gives you the ability to compare the two side by side. And then ultimately, there's an appendix that shows the general assumptions, inflation, real estate growth rate, things of that nature, the average return earned on portfolios, and then going forward, just a little assets table. So that's basically the run-through of the questionnaires and the initial assessment and then retirement assessment reports. The other thing that we talked about earlier is not only is the software now flexible, so you can use it for a small client where it's not economic to spend a lot of time doing a plan for them, but you can also use the software to do a more thorough plan for your better clients. But we also want to talk about the software as being scalable. Again, that's the client who may say, oh, just let me know if I'll be okay. Their perception of planning being that it's an onerous task. And once you get into it and perhaps show them the kinds of things that you could explore with them, for example, exploring charitable giving, exploring things they might want to do for family members, etc. Because it's so life-oriented, the client might easily say, well, this is a little different than I thought it would be. Yes, I'd like to do more. So what you're able to do, and this is the scalable part, is you're able to open VisionWorks, go to that retirement assessment plan, just click the edit button, and you can literally change it from a retirement assessment into a full financial plan or life plan. Now, the only thing with the full financial or life plan, of course, is that we need more data. So we have the financial life planning questionnaire, and I'm just going to open up the questionnaire so we can work with it a bit. So here's the issue. We've already got this data in the software, Bill's name, Sue's name, dates of birth, current salary, value of their homes, whatever it may be. We certainly don't want the client to have to repeat all of that. So all you need to do is open up the financial planning questionnaire, go down to the new load button, and this is in our next release. Select the file, the retirement assessment data file, click the open button, and put in whatever password was used to encrypt the data. And what you'll see is that the financial planning questionnaire is now going to be pre-populated with all the data that you have. So if I scroll up to the beginning, you can see Bill, Sue, date of birth, et cetera, already in there. And if we go down, we can see their salaries in there. And quite literally, for the most part, all the clients are going to do is they're going to itemize some of their expenses in more detail rather than that general expense bucket. If I scroll down a little further, you'll see all the value of the home, the expenses of the home that they gave us before. That's already in there as well. So you can actually take a client from a retirement assessment, a very quick turnaround, into a much more robust plan in a couple of steps without it requiring an awful lot of work on the part of the client. So that's basically the run-through of our new questionnaires and also the retirement assessment reports, the flexibility, the scalability. The one last thing that we wanted to do today is we wanted to talk about a little piece of software that we've had for a long time, and we don't feel is being well used, but we feel with this new flexibility, very simple plans to very thorough plans, that this tool is going to be very valuable. So in our software now, we have something that we call financial attitudes, and it was based on a very extensive study we did. It involves 27 statements. Clients respond to the statements. For every 3 statements, there's an attitude. So 27 statements, 3 statements per attitude. There are 9 attitudes in there. And there are things like accountability, work, spending, trust, and so on. And what we did was we listed out 9 statements that are involved with 3 attitudes. And we've just completed, again, a new fillable PDF questionnaire, which you send out to clients, and I'll just show you what it looks like. Again, very simple. And it just says, is life planning for me? Let me open this up. Clients would put in their name, and then they would just respond to the statements. I like to discuss investments. Yes, I do. Luck is something you make yourself. Yes, it is. So they just go through. Bill would do his, Sue would do hers, and then once done, they click the submit button, and send it back to you. So I'll show you what happens. When you get that back and receive it, what you're going to do is you're going to run the Ideal Planning Candidate software, which, by the way, is available at no cost to you. You're going to click the Add button to create a new profile, Bill. Import the data from the questionnaire. So I'll just select the data file. And then it populates the responses to the statements, and all I need to do is click the Enter, and then immediately I can see how they shape up as far as these three attitudes. So let me just review them briefly. Accountability says the results in life that I get are up to me. So somebody that has a high accountability score, their attitude is anything I can do to get the results that I want is a good thing to do. If planning will help me get those results, planning is a good thing to do. Somebody with a low accountability score, on the other hand, would say it doesn't matter what I do, plan, anything else. At the end of the day, luck or fate will deal me the hand that I get. So for those people, planning is just not something that they really warm up to. Participation is how actively involved are you in the management of your money. So we could have somebody with a very high accountability score. I really see the value of planning, but they organize their financial affairs in a shoebox. So when you ask them for data, for them to dig it out, it's painful. It's really worthwhile that you see this before you work with people. And you can even speak to this issue. You know, I understand you really see the value of planning, but I also from this understand that, you know, financially you may not be well organized. So you need to make a commitment to me that you will work on collecting this data. The other thing that I just want to show you is we have the ability to do husbands and wives. So we can actually import the attitudes for both, and we can link them. And what's interesting about this is we can see Sue's responses. We could go and look at Bill's responses, but we also see the aggregate here. So it could be that Bill is the one with the high accountability score driving the couple into the planning process, seeing the value, but Sue's actually the one who is more organized around finances. So when it comes to providing them with questionnaires, we'd actually be giving the questionnaire to Sue. She's the one who's going to take charge of it. So it doesn't matter that one person has high scores across the board, as long as a couple, you know, their scores look good. And then what we end up with is a grade. So a B plus, A minus, A would be a great person to show the full financial or life planning approach to, whereas somebody who is a B minus, C, C minus, in all probability, what you want to do is you want to really start off with the retirement assessment. So now that we have this flexibility where you can do anything that's very simple through anything that's much more involved, you have the ability to use this tool to get an insight into which approach the client is most likely to warm to. And that, of course, is going to avoid potentially a lot of wasted time. So those are the things we wanted to run through, the questionnaires, the ability to import the data, the ability to do retirement or retirement assessment plans very easily, the ability to shift from a retirement assessment plan into a more robust plan, the scalability, and then finally our Ideal Planning Candidate software, which will help you now gain insight into how you should approach a client, you know, based on what is probably most suitable to them. So what I'm going to do now, and thank you for your patience, is I'm going to unmute so that we can answer any questions and have any discussion.
The conference is now in talk mode.
So, thank you all. Questions?
Michael, on the tactics tab, retirement assessments, it says additional savings, calculate additional savings. Is it automatically calculated, or is that dollar value was inputted?
No, you check that box off, and it will say, okay, given your desired retirement age, the rate of return earned on investment, your desired expenses, I'll speak about that in a second, in retirement, and what you've already told us you're going to contribute to TFSAs, RSPs, et cetera, it will calculate how much more on average they need to save every year through their retirement.
Okay.
And it's all in output. By the way, you'll notice when we talk about a retirement assessment, we use the term, how much income do you think you'll need in retirement? Well, when we do it, we actually shift that to what are your desired expenses. The income we have in retirement could be minimum thrift withdrawals. You know, the income is the income. It's really the question of, you know, how much do you want to spend? You know, spend on your home, spend on your vacations, spend on your cars, et cetera, et cetera. So we actually phrase it as, what are your anticipated expenses? Other questions?
Michael, it's David Wu here.
Yes, David.
On the on the outputs, it showed the income assets, and the first graph showed that it wasn't viable. So you went back in and sort of made some changes to some of the assumptions that the income assets would last a lot longer. In scenarios where the income assets are sufficient, you know, as a household, but the allocation of expenses shows that there is a deficiency in cash flow. And so right now we're going into tactics, and we're kind of drawing down at earlier age in different assets. Does the retirement automatically calculate for that?
So if I understand you, in one case, what we were showing today is the path you're on, you will not accumulate enough to have and do what you want. We could also be showing the path you're on, you're going to have more than enough. You know, you've got an income asset surplus. And then you would just go the opposite way. Instead of retiring at 65, what would happen if we retired at 62? Or instead of saying we need 50 grand over and above our house and car expenses, what if we spent 70 and took more vacations? So you can go in and go exactly the opposite way. Is that the question you're asking?
No, not quite, Michael. What it is, that imagine you're a husband and wife, and let's say that disproportionately there's a lot of assets in the husband's name and not so much in the wife's name. And when you allocate the expenses, you've allocated more expenses to the wife. So what happens is when you do the output, you'll find that there is lots of income assets, but unfortunately there's a deficiency on the cash flow because of the wife's expenses. So you go into tactics to rearrange the expenses a bit.
Yeah, no, actually, David. So first of all, what we're doing is we're looking at the family as a whole.
Right.
But the other thing is that we're importing their income, salary, self-employed business, whatever it might be, or even for people who are already retired, we're importing, OAS, CPP, et cetera. And actually on import, on the settings page, we actually will automatically split. Sorry, I have to apologize. I changed the retirement assessment plan into a financial plan, so I need to look at a different file. But because we know their incomes, we actually on the settings page automatically are assigning the split of expenses based on their income. Oh, okay. Yeah, so that's being done automatically, so there's no changing. But in the retirement assessment, we're really just looking at the big picture as a couple.
Right.
The idea of a retirement assessment, people really are asking the question, will I be okay? So the retirement assessment isn't intended to be a detailed report. It's intended to answer that question very efficiently, which may be all we need to do for a smaller client, but even for a bigger client, we can answer their question right away and then perhaps engage them in, a more complete approach to planning after that. One of the other observations that we have is that CRM2 is coming. And an awful lot of plans that are being done today are retirement assessment plans. And so you can see now with our fillable PDF questionnaires and the ability to produce these reports, I mean, quite literally you can turn around and generate that in, just no time at all. I would say under 10 minutes. And then what you're able to do is show clients what more you could do for them, and that could either be chargeable or it could be done by you to as part of your value add, which then will substantiate what they're going to be seeing in the way of fees that are being paid and so on.
Yes, please.
Yeah, question? Somebody have a question?
Michael, I noticed in the retirement assessment that the default portfolio is gone. And
yes, we've replaced it with an open portfolio.
Right. Now, I guess we don't really need to, but what I was going to do is take the money, because I've got surplus in the open portfolio during retirement, and it's not being added into the the non-registered. So I guess what I should do then is just change the open portfolio's rate of return to the same as the. Would that get around?
Yeah. We actually had to do a lot of work with the software to trick it to work as a retirement assessment. So the default portfolio was replaced by the open portfolio. All the cash flows are being handled in the background. And there were quite a few other things we needed to do to make the software work this way. So there's no need to do that, additional non-registered portfolio if you don't want to, just the open portfolio.
Good. Thank you very much, Michael.
Okay. Any other questions? Or Paul or Jeremy, would you like to
Michael.
chime in?
Michael, it's Alan here.
Yeah. Yes.
So, a lot of us have existing clients already in VisionWorks.
Yeah.
I think I saw in your instructions there is a way to get the data out into a.
Yes, let me show you. So right now, we got this first release out a week ago last Friday. The questionnaires and the retirement assessment reports. And as you may well know, it took over 2.5 months to develop it all. Not so much of an issue around the questionnaires, to be honest, but getting the retirement assessment reports to work correctly. But what we're doing now is we're building the values and attitudes questionnaires as fillable PDF questionnaires. They're actually all done and all working. But one of the other things we're doing is, and there are just a couple of little things we need to finish up with it, but let's say you've got an existing plan, there's a new export button, and you just click to questionnaire, select the questionnaire. So I'm just going to bring up, this is one of the things that has to be worked on. You'll be able to bring up the financial planning questionnaire as a PDF file, and then you'll be able to do an export of known data into it, and then that gives you the opportunity to go out and use it as like an annual review. I'd like you to, review all of these expenses and just update them through the questionnaire, send them back.
So, Michael, that's live right now?
It's the version of the software. This is the next release software. The version I'm working on is as of last Friday, and that export wasn't quite working right. It's being fixed, but I don't have an updated version yet. So, yeah, it's working now.
Michael, there's no mention of CourtWorks in here, so I presume that this is limited to VisionWorks only?
At this stage, I've been asked about that and been trying to think about how we might approach that. Haven't come up with sort of the conceptually clear idea, but you know, we're certainly, it's in the cooker, so to speak.
Okay.
Any other questions?
So if you want to get the children and everything imported, you have a separate questionnaire.
Very good. Yeah, no, very good. So let's just go back to the web. Sorry?
Well, I was going to say, does it matter on the order, on the import? Because I know if you add people after you've already got a plan, the beneficiaries aren't necessarily hooked up correctly and stuff. So I didn't know.
Yeah. You'll notice that there is a questionnaire for additional parties. So when we were designing the questionnaire, we just put in the Bill and Sue, you know, name, date of birth, province of residence, that sort of thing. And then we also added, you know, several additional parties. The questionnaires became very awkward when we added all of them in. And oftentimes for clients, if they're doing a retirement assessment and it's not a blended family, it's basically, we just want to know if we'll be okay, and the children will get what they get. You know, it's just, am I okay in retirement? So really more for the retirement and estate planning, where we need, for instance, children as beneficiaries to model wills, and certainly for the, you know, whole life financial or life planning approach. So what we did was we just created a separate questionnaire for additional parties. So if you are talking families, or you're talking about, you know, the estate, the retirement and estate report, you just send out the additional parties questionnaire, and then, you know, children, or if we, you know, scroll down to the second page, you can have parents in there, for instance, you know, whatever. So it's a separate questionnaire, and I think it's more efficiently handled by using a separate questionnaire for the additional parties. Other questions? Paul, or Jeremy, did you want to say anything?
Michael, I think you hit every point that we'd wanted to talk to today. It was very thorough.
Okay. Good. Well, I want to thank you all for your time, and hopefully this is going to make your planning work much more efficient. You know, elimination of the, you know, double keying data sort of thing, or having to key in data. And hopefully it's going to give you a much broader reach. It's one of the things we talked about was not only are you going to save time and be more productive, but we see the ability for you to be able to provide more service to more clients. So again, thank you very much for your time. And if you have any questions, let me just, before we leave this, here's our contact information. So if you are new to the software and want to get a hold of us, just go to our website, the Contact Us page, and you'll see our email address and phone numbers. So thank you again for your time.
Good job. Thank you.